Welcome viewers to the Money Show, and for our first discussion, as we know that the due date to file your income tax return is around the corner. If you are a trader with income from futures and options, that is very risky, but still that income includes intraday trading. The profits from such activities must be disclosed as business income in your returns. And on to the Money Show today, we will have on board TP Oswal, who is an international tax expert, to understand how are these gains taxed, the type of ITR form you need to choose while filing the returns, and a lot more. So let's get started. But before that, a very good evening, Mr. Oswal, and thank you so much for your time to ET Now. A lot of questions right there, and we will take it to one by one, and a quick answer expected. Wherein first up, let me ask the question that whenever somebody is going to file the income tax returns, what sort of a forms they need to take care of while filing the returns, and especially when it comes to the filing of the returns for their F&O income, what sort of a form they need to be looking at?
F&O income is considered as a business income. It is not considered as a speculation. So therefore, that income, if you have, generally form number 3 is applicable in such cases. So you will have to file the return in form number 3, which is a business income. You must file the return before due date. Otherwise, if there is a loss in F&O activity, it will not be allowed to be carried forward. That care has to be taken. And if the F&O activity results into a turnover which is exceeding the limit under section 44AB, you have to do a tax audit as well and file your tax audit report along with the return of income.
Two things to be taken care of, that 31st is the deadline. Before that, you can't carry forward your F&O losses. Mr. Oswal, just wanted to know that is there any time limit that viewer or the investor rather can actually extend this F&O losses? Is there any time limit on that? And also just wanted to get a clarity on what is the difference between an intraday trading a profit or a loss or a speculative income that you were just highlighting. Is there any difference in that?
Both the answers. As far as the speculation income is concerned, if the loss is there, it is allowed to be carried forward for 8 years. And therefore, if you have filed the return in time, you can carry forward for 8 years. If you have not filed the return within due date, then your loss carry forward is lost. You cannot set off against the subsequent year's profits. Now, second question is intraday trading. If you say my trading is, I just bought in the morning, afternoon I squared it off by closing, by purchasing again, it means neither you have taken delivery nor you have given the delivery. And the law says very clearly, in case if you have not taken delivery and given delivery, then it is considered as a speculation activity, and speculation will be a separate head of income, and you will have to file your same return but under the speculative income. In case if there is a loss on speculation, also return has to be filed in time. And the loss on account of speculation is allowed to be carried for 4 years and not for 8 years.
Thank you so much, Mr. Oswal, for giving us that clarity for all the viewers. But Mr. Oswal, just wanted to understand as well that a lot of viewers still find the difficulty in calculating the turnover. As per the norms, how exactly is turnover calculated, and what will be your suggestion to anybody who is actually filing the tax himself? So what are the procedures or what are the points that the viewer needs to take care of?
In case of this forward trading, future and option, the net margin difference between the buying and selling is considered as a trading, is a turnover. And accordingly, if the turnover exceeds 10 crore, you'll have to file the tax audit report.
Okay, Mr. Oswal, since we have a lot of viewers that are constantly connected with us, and I also got a couple of queries, allow me to post one particular query to you, because the viewer asked that if we are discussing this, then a clarity on this will help. So he says that if somebody has an annual income of 20 lakhs from the salary, which exceeds the basic exemption limit, Now, additionally, I have a turnover of 80 lakhs from futures and options trading and unfortunately happen to incur a loss of 5 lakhs in FNO. Now, as per the income tax regulations, do I need to conduct a tax audit in order to carry forward these losses for future assessment?
For this example, no. Answer is no. The turnover is within the limit. There is no tax audit applicable.
Okay, so if I only have futures and options transaction and no other income, then can I forward
No,
the...
no, no, no,
Okay.
no. Whether this is not relevant, whether you have other income or only future and option income. If you have got a derivative income and that income is exceeding 10 crore, then tax audit is applicable.
Okay. Okay.
80 lakhs is the example you gave, and therefore it is not applicable.
Okay, that helps the clarity, and I hope that the viewer also got his question. But coming back to now, how a lot of people are holding these shares for a long period of time. And Mr. Oswal, I just wanted to have your view on that, because back in before 2003 and 2004, we didn't had the concept like 2004 LTCG was abolished, but some years back LTCG was once again into the gameplay. Mr. Chidambaram actually came up with STT. Till date, STT is ongoing along with LTCG. So what are your views that a viewer or an investor or an FNO trader should still continue to pay that STT amount? Is that fair, or is this something that the government needs to take care of?
You see, Chidambaram, you rightly said that Chidambaram introduced STT. And the promise was given that we are abolishing long-term capital gain, and he has abolished that. But sooner than later, it was expected this will happen. After a few years, after next year, Chidambaram introduced STT on purchase and sale both. Initially, it was only on sale. So therefore, we are one of the unique countries where STT is payable on purchases as well as on sales. Later on, they increased the rate of STT as well. Initially, it was introduced at a 0.25, then it was increased later on. So therefore, in this country, whenever any new tax is introduced, there is no guarantee the promises made by the government will continue, and they will go on changing their promises. Now, hello?
Mr. Oswal, please go on. We have you with us.
Okay. And now then, we have now reintroduced long-term capital gain, and we continue STT as well. Where was this capital gain exemption gone? When I am paying 10% or 10% tax on the capital gain, why should there be an STT? Abolish STT at least. Be reasonable. Don't take advantage of the people who are so docile, who are not objecting. Okay. We do not have an association of investors association, or we do not have taxpayers association. There should be a center for taxpayers association whose voice should be heard by the government.
Yes, Mr. Oswal, I just got a bit deviated in terms of getting your opinion on STT, but coming back to helping our viewers that how they need to take care of while filing their FNO taxes. So now that we have the LTCG in place, which is long-term capital gain tax, and a lot of investors keep holding the shares for this long. So where to show the value of the dividend income and the bonus shares, and how to go about it?
Dividend income is always shown under the head income from other sources. And bonus shares are not taxable, but therefore you have to include in your schedule AL, which is forming part of the return, where original shares are shown. Along with that, increase the quantity of shares, because bonus share is a free share granted to you by the company. There is no cost incurred by you. So you have to increase the number of shares in your schedule LA. That's all. AL, that's all, nothing else.
Well, but now we are seeing such a good boom in the IPO market as well. A lot of listings happening, and the investors are also getting good gains. Though 2022 wasn't a great year, but how will the income tax be calculated on the gains of the shares that are subscribed in the IPO?
You see, if I get the shares in IPO, it's first of all, good company means lottery. And generally, I will not sell it immediately. So the period of holding, if it is beyond 1 year, is long term. If I sell it immediately within 1 year, then it is short term. And if it is a long term, the tax rate will be 10% because the company is listed. And if it is a short term, the company's tax rate will be 15% because the company is listed. For an unlisted company, the rate of taxes are different.
Get your understanding. But Mr. Oswal, now we are seeing that trend shaping up, that a lot of investors are looking to give, or rather gift, the shares to others. This is something that still needs a lot of building. A lot of viewers are still not aware, but a lot of have started incorporating this. So who will pay the tax on the dividend where the shares are received as gift?
Well, if the shares are received as a gift by relative, then it is not taxable in the hands of the recipient. But if I receive the shares, if I give you the shares, you will be liable to pay tax on the value of the shares received if the value exceeds more than 50,000 rupees. Very clear? Now, if I give shares to my wife, the income derived from such gift is taxable in my hand. So the dividend will be taxable in the hands of the person, in the hands of the donor, that is spouse, who has gifted to wife. Similarly, if I gift the shares to my son's wife, the income therefrom will be taxable in my hand only. It will be, this is known as a clubbing provisions. Under section 64, income is deemed to be your income only, even if the asset is transferred directly or indirectly to wife or son's wife. If I transfer the shares to minor grandchildren means son's son, then the income therefrom arising therefrom till his minority is taxable in the hands of the parent. Whosoever is income, the parent means mother or father, whosoever's income is higher. So if the gifts is received by minor, income is clubbed along with the parent's income. If the gift is received by the wife, the income is taxed in the hands of the husband. If the gift is received by son's wife, then the dividend income is also taxable in the hands of the donor, that is the grandfather, the father-in-law.
A lot of things to take care of, and a lot of family tree mapping also be done. But Mr. Oswal, we also got your understanding that over 8 years of period you can carry forward the losses or in F&O. But which expenses can actually be claimed by F&O traders? There are some more additions as well.
Well, if it is a business income, all expenses related to business will be allowed to be deductible. There is no reason why it cannot be allowed. For example, if you are carrying out this activity systematically, and you have employed people, you have got a full-fledged office, you have got computers, depreciable item, you have got peons, every expenditure is deductible like any other business expenditure, provided you have demonstrated the documents. Yes, these are the expenses I have incurred and I am entitled to get the deduction.
Okay, understand. But Mr. Oswal, just wanted to understand that how important are AIS and Form 26AS for the purpose of ITR return filing?
Important. These days, filing return is a really tedious job. It is not simple job. A chartered accountant takes long time, and unfortunately, this is one area which you have asked me a correct question. You see, AIS and AS both are uploaded by the government or the agencies in 15th of June. Now, you have to file your return by 31st of July. It is an impossible task to complete because you are handling so many taxpayers and you have to complete everybody's return. You have to match every information given in AS and AIS, both. And without matching, you cannot file the return because there will be, for example, if you have PAN account holder, PAN number is given to any party, and you have done a very high value transaction which is reported in AIS, then all these AIS information you have to collect and match with your records, your bank account. Otherwise, there is a chance that you can be caught by the tax department for having not reported certain transactions which you have incurred. Similarly, the incomes arising on which the tax is deducted at source, which appears in the AS, you have to also match those information with your bank account, with your statement which you have prepared, on the basis of which you are going to file the return. So matching of the information in a smaller SSE, very easy. But a person who is doing transactions on a day-to-day basis in share market, matching of the information takes quite long time. Huge number of transactions taking place. You have to deploy people who will match everything. And believe me, this AIS gives information inaccurately also. And in case if this information is inaccurate, then you have to also ask them to correct it first. If you are a joint account holder with your wife, the AIS will show the information in both the parties' accounts. That is your husband and wife's account. So therefore, there also you have to ask them to correct it properly, and you take the first holder's name as the basis of disclosing the information. But at times, appropriate disclosures are also required in the hands of wife. So therefore, these are the care required to be taken. And these days, filing of return is very difficult job. It's not an easy job. A lot of people believe that they themselves can file the return. I honestly don't know how to file the return myself. So I depend upon my chartered accountants in my office who helps me in filing the return.
Mr. Oswal, but a lot of viewers or a lot of a lot of people actually look up to you to seeking the advice on how to file the return rather. But before we let you go, Mr. Oswal, just wanted to have your take because you have a rich experience that till date. What are some of the mistakes that people generally tend to do, and anything that they really need to take care of, which you feel that is something that they always ignore?
Most important advice I can give you on that is if you have got any foreign assets, for example, a bank account, shares in a foreign company, property in a foreign country, or any other financial information or non-financial information concerning you in your name. For example, you are also holding a car and car is in your name in a foreign country. Please note, they are all required to be disclosed in income tax return. You may ask me a question, sir, these are assets. Why they should be disclosed in the return of income? But unfortunately or fortunately, we have been copying best practices of the world, and we found this practice in some countries, so we adopted that. The Schedule FA was introduced in Income Tax Act from 2015, and therefore it is required to be mandatorily required to be disclosed. Please understand the consequences. If all the foreign assets are not disclosed in your return of income, and at times I can give some more examples. You are employed abroad in America, and the pension, the amount which is deposited in section 101K return, this is a money like our provident fund money which we deposit in provident fund account balance. Similarly, in USA is 401K balance, or in other countries there will be another balance. So all these are required to be reported. If you do not report any of the assets in your return of income, please note there is a provision under the Black Money Act that these assets are said to be treated as black money if you can't explain the source. If you explain the source, fine, they will not tax it again. But they will levy penalty of rupees 10 lakhs even for a small asset which is not disclosed in the return of income. So the most important thing which I advise every viewer, that Schedule FA must be complied carefully. There is no other penalty under the Income Tax Act except inaccurate particulars we fill up in the return of income. So therefore, all other provisions you can take care. In case if the returns are filed with inaccurate disclosures, possibly you will get a chance sometimes, because under section 139(9) return, the income tax department can ask you to cure the defect within 15 days. But there is no provision for curing the defect of Schedule FA. And therefore, please be mindful that Schedule FA should be prepared and correctly, properly done. And as far as form, while filling up the form, that a 26 AS or IAS should be completely tallied with your bank account, with your assets, with your liabilities, and with your transactions. So that as and when the scrutiny comes in your return of income, you are confident that whatever you have filled in, income tax officer cannot go beyond that. You have no business. You can have a full sleep night without any sleepless night. So that is one advantage. And lastly, I would say when you are when you have bank account, maintain and give them the PAN account number to ensure timely refund. In the return of income, give the bank account detail and the PAN account so that you get the refund of your tax refund in time to your account directly. So these are the basic things which are required to be kept in the mind while filing the return. And lastly, if you are a loss-making company or loss-making assessee, file the return in time so that you get losses carried forward. And loss can be, except salary, loss can be under any head. Income from house property, there can be loss. Business income, there can be loss. Capital gain, there can be loss. Income from other sources, also there can be loss. Salary, I have not come across anybody suffering losses on account of which he has to bother about filing return.
Hope, Mr. Oswal, that somebody should not have a loss in the salary as well. That's I'm hopeful of. But with this, we'll let you go on that. Thank you so much for joining us today on ET Now and helping all of viewers understand that either they are trading in F&O, how exactly they are taxed, and what are the points that they need to be taking care of. Pleasure having you as always.
Thank you. Thank you.
So that was the discussion all about that if you are an F&O trader, so income tax filing deadline is very near and what points that you need to be taking care of. We were chatting with international tax expert Mr. T.P. Oswal. But moving on, viewers, let's get you the highlights from WEF report, wherein according to the recent survey of the Chief Risk Officers, that is CRO community of World Economic Forum, the geonomic and geopolitical relations between major economies are likely to be unstable over the next 6 months as a result of the world facing growing economic stability and political tensions. A recent survey indicates that 85% of CROs expect continuing changes to the financial and the economic climate, while over 75% of CROs believe the use of AI technologies poses reputational risk to their organization. Meanwhile, armed conflicts and regulatory changes are also cited as the potential threats to the organization. The conflict remains for the fact that while dealing with the rising prices and supply disruptions, the organizations are increasingly confronted with a variety of ethical and societal hazards that are significantly more difficult to navigate than regulatory compliance alone. So those were the highlights from this particular report. But with this, viewers, it's time to step into a short break. But don't go anywhere. A very interesting discussion lined up ahead with two of our special experts. That if you are somebody who is going to abroad to either to study or for a job purpose, how you should manage your finances. We'll discuss all of that, but right after this quick break. Hello and welcome to the ET Money Show, and let's get started with our next discussion, and wherein we will discuss that if you are somebody who is going to abroad either for studies or either for education, then how are you going to manage your finances? Because if you will see, then a lot of students or people who go abroad, they have to not just spend the money, they look into various options that are available to earn as well, and that's a very important thing when you are actually shifting the cities for work or education. Managing your finances is the key to sound financial planning over the long term, and hence it is important that you get this right. Let me welcome on board two of our special guests to guide you better if you are somebody who is going to go, who is looking to go abroad. First up, we have Shilpa Bhaskar Gole, who is the founder of NerdyBird Financial Wellness, and we also have Dr. Anjali Chhabria, who is a psychiatrist and director at Mindtemple Institute of Behaviour Sciences. A very good evening to both of you ladies, and thank you so much for your time to ET Now. Shilpa, let me come to you first. Touching upon somebody who is actually looking to go to abroad for studies, and as a student, what needs to be taken care of? Because as a student, how mature are you to take care of your finances? Because a lot of students, they actually look out for various options that where they can earn money and manage their finances, because the education abroad is definitely expensive, though it is reimbursed through loans. But how to go about it, and which are some of the important things that one needs to take care of?
Thank you for that question, Srishti. And I want to congratulate you on picking up such a great and relevant topic, because I think this is the space in life for most people who are just stepping into adulthood and starting to manage money on their own. So I think
कविता को thanks भिजवा देना.
that itself comes with a lot of mistakes that you make along the way, and learn from your own mistakes as you go along. So, by highlighting that point, I think you're also setting a foundation for yourself financially here, and starting to understand what your relationship with money is. Having said that, I think the first and most important point for anyone to think about before they go abroad to study, or just, they're leaving their home, they're leaving their parents, and they're going to set out on their own. The first thing to figure out is how much money are you going to need. And the point is that none of us have a straightforward answer to it, but can they do a little bit of guesswork around how much money they may require, and what are some of the expenses they foresee along the way when they go to this new place and have to set up everything from scratch. So all of these expenses can basically be categorized into your non-negotiable expenses which are your basic needs, your comforts, things that that are linked to your well-being, I would say. And the second is your negotiable expenses, which are more discretionary in nature, which you have a little more legroom to tweak as you go along. So when you think about the non-negotiable expenses, I think the most important pieces there are, having a roof over your head. Are you going to be staying in the college hostel? Are you going to be staying in a paying guest accommodation? Or are you going to be sharing a flat with some peers? So that is something to figure out, and to understand what would be the rental cost, or what would be the cost of accommodation in this place that you're going to. Also important to see is the food expenses. How much are you going to be spending on your eating, and very, very basic needs like your utilities. So if you are staying in a paying guest or in a flat that you are renting with a couple of friends, then what are some of the utility expenses that you're going to incur in terms of your electricity, in terms of water, and any other utility expenses that are very specific to that particular geography. So that's also very important to take cognizance of. And apart from that, transportation is also something that we're not aware of, and depending on what the geography is, what this location is that you're going to, that's also a very important non-negotiable expense that you need to start to think about. In terms of the negotiable expenses where you have a little more legroom, is these guilt-free spending that you want to do around outings with your friends, probably going out partying, going and buying books, spending money on your hobbies, all those fun things that you want to do. And this is a very early stage, and you don't want to be sort of limiting yourself there as well. I'm sure all of us have done it in our lives, where we've gone through that phase and we want to enjoy those experiences too. So I think once you have figured out what your non-negotiable expenses are, start to think about what are some of those other expenses for which you want to set aside money. And this is where you start to create a spending plan for yourself, or in other words, a budget. So I think that is the first and most important step here, Srishti, to think about.
Thank you so much, Shweta, for just jotting down on those expenses which are like mandatory in nature, and which are some of the negotiable expenses. We'll also come to back to you in terms of how to think upon the options of earning more money and then managing your finances, or rather invest the money. But before that, I would like to come to you, Anjali, because that anxiety actually builds in, because when you are a student, you are set on a limited budget. Other than that, like I was telling, that people generally look out for various options where they can actually earn some money and then compensate for the same. So as in your experience, this scenario, how does that build the money habit in somebody, and how to tackle that anxiety if someone has one?
So, see, money definitely can cause anxiety, too much money and too less money. So, I think, as our colleague has just said, that one needs to have a realistic expectation of what your expenses are going to be. Of course, a lot of students want to go there and start earning money because they want to have the freedom to, to have a free hand when they want to spend. But what I talk to them is, I tell them to first see what is the time on hand. If they are going to study, then that is their first priority. The second thing is, yes, of course, it's good to have a healthy relationship with money where we are not, not just running after jobs before being qualified, at the same time, not spending excessively. So we are not going anxious over, oh my God, where will I get this money from? And how am I going to, save money or spend money? So it's very important that we have a discussion with our parents. We check with them what is the budget we are getting, and we have a realistic expectation out of it. So, for example, if you know that food is going to cost you $10 a day, then it's important to figure that in. If you want to have an outing with your friends, which of course, it's important to discuss with your friends, how are we going to, going Dutch is something that always helps, because then everybody can spend what they want to and not get into, not ruin friendships because of money issues. Because you may just, a lot of people just go and, just go and kind of, my friend wanted money, so I gave him or her money, and then they feel shy to ask them for it. So it's very important that at the beginning only, and, just discuss money. And a lot of people are uncomfortable discussing money, parents with their children, children with their parents, friends with each other. But this is a healthy discussion to have, and one must have it early. The other issue is, whatever you do, however sensible you are, sometimes you may land up in a spot where either you've spent money, you've lent money, or you've, underestimated the budget and you've gone over budget. This is the time to go into the emergency money. It's very, very important to keep aside emergency money, which you only use during emergency. And for some reason, even if you feel that you do not have the money or you've underestimated it, please talk to your parents. They may just scold you for a bit, or they may just, give you this lecture that parents like to give you. But it's fine. They love you and they do not want you to go there and worry about money. If for some reason you cannot talk to your own parents, talk to a sensible friend, talk to a teacher, talk to an aunt, talk to an uncle, talk to a counselor. Most of the educational institutes have counselors. And remember, you are not the first person to have this problem. A lot of people have been there, done that, and learned from their own mistakes and lessons. But the faster you admit your mistake, the faster you will be able to learn from it, and you will not hopefully make another mistake like this. Also, be very, very sensible when you have a credit card, how you use it, when you use it. Credit card is not unlimited money, it is money that has to be returned, and you're paying a little bit of money on top for using the credit card. So once you understand this, you will make sensible decisions about money. And soon, once you're comfortable about it, that is not going to be an uncomfortable topic and not cause you any anxiety.
Yeah. Okay. Thank you so much, Dr. Anjali, for jotting down all the points that how can one tackle the anxiety when somebody is going abroad. But I must tell you that it's good to see that how calmly you speak and how calmly your pet is just resting on your lap. That's really cute to witness. But Shweta, coming back to you, just wanted to get a sense that, like you were mentioning about Shilpa, I beg your pardon, Shilpa, coming back to you, like you just mentioned about what are the expenses that one needs to take care of, but herein we are trying to find a solution to the income part as well. What are some of the avenues that one can actually explore in order to earn some extra money, which in your experience that you have witnessed, some of the areas that people really work upon to get that extra money in their hand to spend and loosen their pocket, as well as what's your sense on what could be the stepping stone as a student, that how to get a direction in terms of investing as well? Because maybe as a student where you can actually plan on those habits to build, rather to save or to invest some money. So what will be your advice to all those students out there?
Srishti. So I think I would also like to compliment Dr. Anjali on her pointers. I think she very rightly said that it's very important for you to sit down with your parents and have that conversation around the spending plan of yours before you set out on this journey. So I think once you have the spending plan and you actually go abroad and you start spending actually, you'll start to notice that there may be some gaps, like you rightly said, Srishti, between your spending and how much you actually need to be spending. You may have a plan that you go with, but when you go there, you find that things are not really going as per plan. So one is about speaking to your parents about it and trying to see whether you could negotiate a slightly higher income from your parents in terms of the pocket money that you receive from them month on month. And apart from that, like you rightly said, we could look at different avenues where you can bring in an additional income. So some of the experiences that I have seen amongst my clients, there are people who have gone and taken up academic roles within the college or university that they are at. So that's a nice way to bring in an additional income where you are working as an assistant to your professor, or as a research assistant, as a teaching assistant. So those are certain ways in which you can also improve your academic skills, and at the same time you're also earning an additional income. And I've also found other people who've taken up waiting jobs in restaurants and hotels. I think over there it's a very, very acceptable and not so uncommon phenomenon where people take up these kind of roles to be able to make an additional income. And these days, Srishti, I'm sure you know that there are a lot of options also available online for you to earn an additional income. So I find that things like affiliate marketing and content marketing are also forms in which people earn an additional income. So people could look at things which are very, very unique to the location that they have gone to see how they could bring in that additional source of income, Srishti.
Thank you so much, Shilpa, for highlighting all those points. Maybe this will help all the students out there. But with this, we are completely out of time. Thank you so much, Shilpa, as well as Dr. Anjali, for joining us today for this particular discussion. And have a great evening.
Thank you.
Thank you.
So that was all about that. If you're someone who is actually looking to go abroad for study purposes, then how you should manage your finances, how you should start building on to get started with your investment journey. But with this, viewers, it's once again time to slip into a short break. But don't go anywhere. We'll be right back. Welcome back to the Money Show, and viewers, it's that time of the show where we get you answers for all your mutual fund related portfolio queries. And if you have one and if you want to seek expert advice on the same, you can actually write to us on our WhatsApp number, that is 865-797-4571, or you can also email us your queries onto the Money Show @etnow.tv. Share your portfolio with us, and also what's your query, in what topic you are seeking your advice of the expert. We'll try to get the answers. And for today's show, let me welcome on board our special guest for today, which is Shweta Rajni, who is the head mutual funds at Anand Rathi Wealth. Hi, very good evening, Shweta, and thank you so much for your time to ET Now. Let me just get started with our first query, and this one is coming from Sunil. This is an email query. He says that his niece is 2.5 years old. She lost her father in February this year, and now Sunil is looking to invest in SIP for her education. He needs help with the strategy to invest in the mutual fund. So how should Sunil go about it? What could be the minimum corpus in terms of his investments, as well as what should be the expectation on that particular front?
Good evening, Srishti. Good evening, Sunil. One thing I want to, acknowledge is that you've taken one step in the right direction of starting to plan from that age of 2.5 years, for her education. This one step will help you play the compounding to your benefit. There are 3 4 things that I would want to lay down here. Step one that you need to do is have a goal based investing approach. So if you are planning for her education, right, you're looking at getting this money somewhere around 13 to 15 years down the line or post that. So what you need to do is first check what kind of corpus would she need at that age, and then work backwards to see, what's the kind of investment amount that would be needed today in the form of SIP. One classic example, let's say you're looking at a 40 lakh of amount, let's say 15 years down the line, at a 14% of growth rate, because we're looking at an equity investing, you would need to invest somewhere around 7,500 per month today. So do your math on that. Second, you have two options for investing today. One, you can go in for children's gift fund. There are 3-4 points that you need to keep in mind over here. One is, when you're investing in a children's gifts fund, it has to be invested either by a parent or a legal guardian. They have a minimum lock-in of 5 years, but the money is generally locked in till the child reaches 18 years of age. You can decide whether you want it to be equity heavy or debt heavy. So these are solution oriented funds where just one fund, go ahead, park it, leave it to the fund manager. But like I said, the restrictions are in terms of steep exit loads and lock-in periods. Your option two, and something that would be my recommendation, would be you construct a basket of few funds and invest in those diversified funds. A basket of 13, 14 funds is generally good enough. It will give you exposure to the different styles of investing. You can go in for, given that you have a longer term horizon, go in for a market cap of 50% large, 20% mid cap, 30% small. So some of the funds that I would recommend to you would be, something like a Franklin Blue Chip Fund, an HDFC Small Cap Fund, Invesco Small Cap, and some of those.
Okay. Okay, so that's the advice coming in for you, Sunil. That's a very wise decision to start investing for your niece, and those are the funds that you could be looking at. But Shweta, we are actually today a little less on time, so I'm just taking up the next query, and for that we have a live caller. Naman, I'm taking you live. Please go on. We have Shweta on board. Please ask your query.
Good evening, ma'am. I'm 55 years old. Okay. And I'm investing since long time in mutual funds. So, am I loud?
Yes, yes. Please go on.
Yeah, okay. So, my corpus is around 1.14 CR. So, initially I started investing in regular funds, like everybody. But now I want to switch to direct fund, because I'm a long-term investor. I don't need getting profit or something. So I want to keep all my funds in direct. So recently I switched few of them, which was grandfathering, where it was applied.
Okay. Okay, so that's the question coming from Naman. Recently, he did make that switch, Shweta, but now at this point in time, should he just book profit on all the regular plans and reinvest his money through SIP in the direct plan, so that if market corrects, he can actually have better average NOV? So what will be your suggestion on this?
Namansi, 3-4 points here. One is that if you're looking at profit booking, then you can book 1 lakh of profit every year without having any capital gain implication. So that is something that you should book. Point two, if you're looking at the current market level and trying to time it so that you exit at peak and enter at low investments, honestly, there's enough data that shows that the difference between you continuing versus you trying to time it would not be more than 1-2% per annum. And nobody knows if you see a market correction from the current level, or markets may go to a 21,000 and then see a fall. So my recommendation to you would be, don't profit book because market is at a certain level. 1 lakh is something that you should do. Go ahead and do that. On the last thing of wanting to switch from regular to direct, now the difference between the two plans is not more than a 70-80 paisa differential, assuming that you're paying an advisory fee of somewhere around 50 bips, because if you're investing in funds, somebody is.
Okay. Apologies because we are completely out of time in this edition of the Money Show. Thank you so much, Shweta, for joining us today and helping our viewers with their mutual fund portfolio related queries. But with this, viewers, it's goodbye from me and the entire team who put this show together. Thank you so much for watching.